All right, so I'll start with other questions, and then when he comes in, then I can always tackle that question. So someone is saying, how do we do top analysis with BTMM? All right. So, in terms of top-down analysis, this is what you can do. So, top-down analysis, for those who are not sure, we're referring to analyzing higher time frames and going down as low as lower time frames. So in every top-down analysis, the key point is the time frame that you're gonna start in, and we normally do W1, but you can start in any time frame. It's entirely up to you, but we normally do W1. So all we wanna know from the higher time frame is the bias of the market, the trend direction. Like in this case right here, if you just look at the charts just by looking, you can tell that the market has been on a downtrend. If you want to look at it from this point, the market has been on a downtrend. So it has been going down. So what this means to you is that if you are going to trade this pair, you are looking forward only to sell setups. Ideally, that's what it means, right? So as far as BTMM is concerned, you can then count levels, which I don't really advise is always that people should count levels from higher time frames because it ends up being too subjective um, with the amount of movement in price. Sometimes you might not really see clearly what price is doing. But if you are keen to learn more how to count levels from higher time frames, all you have to do is with your chart zoomed in like this, you need to find the highest point, right? You need to find the highest point. So in this case, the highest point or the last previous high, because remember we said the market is going down. So the last previous high or highest point is this one right here. That is the area where we want to start counting our levels from. This is in terms of BTMM, right? This is where we would want to start counting from. Now, every strategy has market structure involved, right? So every strategy has market structure involved. By counting levels, all right? By counting levels, you are simple marking out market structure. That's what it means when you're counting levels. When you're saying, yep, I'm in level one, I'm in level two, I'm in level three, you're simple marking out market structure. There's nothing different. The only difference is that you are marking the moves as opposed to the market structure where we only mark the break and then say, oh yeah, that's a low, that's a high. But here we are marking moves. All right. And remember, the lower lows and higher highs is also another way of marking levels. So it's nothing different from what you're doing with market structure. It's not like it's a completely new topic. It's the same thing. The same way you say, yeah, for me to know my levels, I will say this is my higher high. So we need to break that higher high and form a new higher high for me to say, yep, now we are in level two. That's exactly how you mark your levels, and that's exactly how you are supposed to mark your levels. And in that case, you are simple marking out market structure, but you are interested in the moves away from that area, right? So same thing with the higher time frame. Now, why am I picking that particular point as the highest point to start from? The reason why I'm picking that point as the highest point to start from, if you look at where the market is coming from, if you look at where the market is coming from, you can tell how the market has been moving up and down. So you can tell the market formed a peak formation and the market has been moving up and down in that area. All right. The market has been moving up and down. So that on its own shows you the downtrend movement. So you've got your peak, you've got lower, low, higher, low. You can say lower, low, higher, low here. So lower, low, higher, low, and keep on moving that way until this also becomes one of your higher lows, right? Even though when you were to mark your levels and say, can I,
Lower
sorry?
high. I said lower high, sir.
Sorry. Lower high. Yes, lower high, lower high, lower high. Sorry about that. Lower high. Now, if you were to mark your levels and say, okay, this is my lower high, that's my lower high, that's my lower high, right? Because this is a downtrend, right? Because this is a downtrend, you want to see lower highs, right? You want to see lower highs being lower than the previous highs. At the same time, you want to see the market taking out um taking out the lows while it's moving in that direction. So we then start to count our levels from the last peak that was printed in the market. Now, because we are counting levels from a higher time frame, like I said, we don't look at whether that peak formation is broken any structure or whatsoever. All we are concerned about is, yep, that's the move. That's where we start marking from, right? Now, in this instance right here, you can then come here and say, this was my first push. Why? The reason why this is your first push is because here, the start of the month and the end of the month. Sorry, is it the month? The year, sorry, because we're in the weekly time frame. So the start of the year and the end of the year, right? And start, end, start, end, start, end. Ideally, we are saying the entire move in that box will be a level. Pull back, entire move will be a level. Pull back, entire move will be a level. Ideally, that is what we want to see from higher time frames. We don't want to be too invested into higher time frames because they don't have so much value. The only thing that they have is, okay, where are we going? Where are we coming from? Right? And after marking that, you can then come here and also mark that. So by marking that, you can then say, yep, this is my new low. This was my previous low, which was taken out here. So that's my new low. And now I want to see the market trade lower than my new low. That's what you're expecting. So this then confirms that, yep, on the weekly time frame, the market is still on a downtrend, right? That's your analysis. The market is still on a downtrend because you are wanting to see your level 3, wherever your level 3 is gonna be. All right, I'll remove this um, so that it becomes clear. Now that we have the what we suspect to be level 3, you are then no longer concerned about what's happened here. You are only concerned about what's going on in box 3. That is how you do your top-down analysis, right? On BTMM. You are now concerned about what's going on in box 3. So what you then do is if you move to the daily time frame, right? Can I start counting my levels here? Of course not. Why am I saying so? Because I can clearly see from this box that I do have one of the top uh, points there where a reversal initiated. Right. So what it means is that the market was on a downtrend, it reversed and was now on an uptrend, and then lastly came back on a downtrend. So why should I be concerned about what's going on here? I will not be concerned. So my focus will be solely starting from here going that way. That's where now, uh, that's where I want to now what? Focus on. All right. I hope this is making sense. Now, the same thing you do when you get here, because you want to mark your levels. So what do? You mark your level 1, you mark your level 2, you mark your level 3. Okay, someone said yes. All right. So you mark your level 3. So what do you expect when your market has moved 3 levels? And I remember we did trade this setup right here, but we only traded up to the 200 EMA, if I'm not mistaken. Yeah, we never traded the rest of the setup. And I do remember we tried to take a buy here. It only bought for a short time and then it sold on us. All right. Those are some of the things. Now, that is what you expect after 3 levels. You expect a what? A reversal. All right. So because you want to see a reversal, what do you expect? Important thing again. If there is no W, then there is no reversal. I don't know how many times I can say this, but if there's no W, there's no reversal. Never ever attempt to buy from here. Like you are coming here and you're saying, yep, I've seen my level 3 and I've seen my first leg, and then you attempt to buy from there. You know what's going to happen? Your stop loss are going to be hit. Your attempt to buy again, your stop loss is going to be hit. This is level 3 behavior. And the fact that the market is forming a peak from a higher time frame simple tells you that you have no business buying from the D1. You can only buy from the H1 and target whatever you want to target and get out of the market. But you can't buy from the D1. All right. And you gotta wait for the W to form first. Then that's when you can say, yep, I've seen the W form and now I can look for setups. All right. Now, this is what you have. So where do you go next? Because you are coming into your 3 levels, right? So it means here is where you are interested in. But let's just say this W is not yet there. But you have counted and seen 3 levels where you are on your 3rd level. So for you to then know that, yep, my 3 levels are complete, you need to drop down to the 4-hour. And then on the 4-hour, you need to confirm within the boxes whether you do have 3 levels. And in this regard, what I usually do is instead of confirming whether I have 3 levels, I go straight to H1. All right. I go straight to H1, and then from there, oh, come on. I go straight to H1, and then I find the highest point, which in this case, in this box, the highest point is this one, just after the end of the other box. And then I start to count my levels from there. All right. I start to count my levels from there and then say, yep, that's my level 1 H4 and that's my reset. That's how I do it. All right. So I start to count my levels from there and then say that's my reset, say that's my 1, and then say that's my 2 and that's my 3. Then I say, yep, that's my second level. So that's my first level, that's my second level. So I don't worry about marking the 1 hour, but I just circle the 4 hours. That's what I usually do. I simple circle the 4 hours. That's what I usually do, just to make things simpler and quicker for me. And then I come down here and I remember how we're trying to buy this and we couldn't win. And then I come here and I count, yep, 1, 2, and 3. All right, for those who can't see, I'll try and zoom in a little bit. Oh, so you have your peak reset. So you have your first push into a consolidation, second push into a consolidation, and third push right there. So then I can go ahead and say, yep, I have seen 3 levels, and I can confirm that my D one level is complete. Right. So what it means is this is your first leg for D1. That's exactly what it means. It means it's your first leg for D1. So at the back of your mind, you then should know that if D1 is going to form a second leg, there is a highly likely that your second leg will be an entire move on H1, just because it's a higher time frame, right? So you know that my second leg will appear as an entire move, which is more or less like a 4 hour um a 4 hour level on its own. But all this is level 3 behavior. So if you say I've seen my first leg and then prices went to the 200 EMA and created an M, so you start to sell from there until you see what you think is your second leg, and then you start to buy from here. So if you buy from here, your first target is the previous high. That is where your first target is. Because what price will do is, after creating a first leg and the second leg, price will attempt to break the neckline, and then price will come back into the range, and then it will go up. That's what price will do on peak formations. I remember I sent this on one of the peak formations videos. All right, still there on YouTube. So well, it's an unlisted video, so you can only watch it if you have a link. But that's what it means. You form your first leg, second leg, and again, someone might say, "Ah, but this does look like the market structure thing." Of course it is. It does look like the market structure because it is. What it simply means is on the H1, you are having higher highs and higher lows when you are going up, and then all of a sudden you break the last low, and then you start going down. That's what it simple means. And by this move, you have somehow taken out the last confirmed high, because that high was responsible for breaking the first leg. All right, the first leg low. So that high, by taking it out, it means we have strong indication that the market is gonna buy. So which is this entire pattern right here. Someone might say, I've seen this before. What if this is ICT? It's the same thing. These strategies are all interconnected. They do the same thing. This is the exact same thing you have been doing before. You call it an ID50, you call it a pull to the neckline or whatsoever. It's all the same thing. That's what you are now doing on the 1 hour time frame. You are now saying on the 1 hour time frame, on the D1 time frame, this is what you want to see, because that's where the setup is coming from. But on the 1 hour time frame, all you want to see is an entire move, an entire cycle, and then an entire pullback of a cycle, and another entire cycle moving up, which is what happened right here. And then after that, you can tell after the market has broken that high and pulled back to the range for the low, you'll see this is the lowest point the market has been to. And it has never come back from that, because now the peak has been confirmed. So we have no business to come back down there unless and until the higher time frames then say, yep, Now we are about to continue going down because remember, you are buying on a higher time frame because it's showing you a buy on the third leg, but you also keep in mind this market is still selling. So that's how you do a, a top-down analysis strictly by following BTMM rules and not doing anything. All you're doing is just moving your levels up until to the lower time frames. Does it make sense? So that I go to the next question. All right. What's going on to my mouse? Okay. Someone is saying HF is a prime example. Oh, okay, okay. Yeah, I've never checked it. All right, let's go to the question that Ricky asked because this question we need to answer it. It's very, very important. Now, there are a lot of factors that influence um the movement of pairs. All right. So confirming the chart page that you can see my page. I've moved on from oh, that's good because I'm now on TradingView. All right. I'm coming here on TradingView because it's so much easier to draw on. So here's the thing. Ricky asked a question and said, so I'll repeat this question so that everybody understands. So here is a sell setup on USDJPY. We've seen the peak and we've come back into the range. So we want to sell USDJPY, right? So how, okay, I'm seeing other sell setups on other pairs. This can be Chief JPY. This can be uh all right, let's say FJ and then say this is cut JPY, right? You also have GJ as well. Maybe GJ has the same setup as UJ. And then you also have EJ as well. So you've got different pairs, right? But they're all JPY pairs and they're all showing a similarity that, yep, we are now on a sell movement. So how do I know which one is gonna give me a better move? Right. It's very simple, but not simple. Okay, so first thing is, do we have any, okay, on that particular day, do we have any news related to GBP? Do we have any news related to GBP or CHF or obviously JPY will be on the um, Asian session. So do we have any of these news, right? Because if we've got the GBP CHF news and we want to trade a sell on GBP JPY, and then it so happens that GBP pairs are on an uptrend, or for some reason they are on an uptrend, or the news is going to be positive, and we'll see the market go up. What then this means is that this is not a good setup because at some point it will shoot up or it will consolidate, whichever the case may be. So it's not a good setup to trade it. So this goes with market sessions to say, are you in the New York or are you in the London, especially those two, right? So look at your news and say, okay, which ones among these have news? If none of them have news, then that's good news for you, all right? Because you don't have news. So look at the ones with clear setups. Which one has a clear setup. In this case, you can see that this one has a clear setup, that one has a clear setup. This one, you can tell we're still yet to form a second leg. This one, you can tell it's just a consolidation and we are not sure whether it has formed a peak formation or not. It's just a consolidation and nothing else. And these highs haven't been taken out for some reason. There's nothing there, right? It shows you that if at some point this guy decides to pull back, it means this one will pull strongly to take out the highs, or this one will pull strongly to form that second leg, while this one just pulls to this level and then continue selling. That's what it simple means, right? Now, I know your question is, which one is the best for me that I should take? I'll tell you this. I have a peak formation. I have a peak formation on the other trade, right? So if you look carefully at these trades, right, let's do it this way. If you look carefully at these trades, you want to sell. Trade A did not take out the high of the first leg. So trade A did not take out the high of the first leg. So what does it mean? It means that this low right here is not a confirmed low because it did nothing. It didn't take out any high. So I personally would prefer trade B, and I'll show you in a second. Because for us to confirm that trade A is actually now on a sell, trade A has to break the previous low that was formed. All right? Because this law is responsible for a break of that high while going up. So it means I will only look for a setup that broke. I will only look for a setup when I know that we've broken that low and then we're coming back into the range. That's when I will look for a setup. Whereas type B, the good thing about him is that he broke the setup, he broke the high, and meaning this is now a confirmed low, right? So that means this one will confirm quickly, all right? This one will confirm quickly as opposed to this one. Now, let's go to chart examples so that I show you what I'm talking about. Let's try and look at, let's see the JPY pairs if they have anything. All right, my apologies. Let me pause the recording. I need to change my mouse battery. It keeps acting up. Just a second. All right. I hope now it's okay. So all you're looking for is trading a pair. All you're looking for is trading a pair with the most perfect setup. All right. So what you are looking for now is we need to check I'm looking for something, maybe say USD JPY, right? So let's say the JPY pairs are going to sell. This is the 4-hour time frame. Let's say they are going to sell this week, right? I'm gonna send analysis, by the way, during the week. You can see that UJ broke the high there on his way up and is now near the low, right? So what it means is UJ will break the low and then come back into the range and then sell. All right. Now, if UJ had not broken that high, it simply means the low that we were supposed to look at is this one. So for us to know that UJ is indeed a sell, UJ was supposed to break this guy instead, because this low would have not taken out that high, but this low did take out this high. All right. All right. Let me repeat again. So ignore this part, right? Just say there's no part, this part. You've got equal lows or something lower than that, right? So by ignoring this part, what we are saying is that this low broke out this high. It broke it out when it was moving up. So it took out the high. So it means this low is confirmed. All right? This low is confirmed. That's what it means. So this means if we form a second leg lower than this one, for us to be sure that this is now a sell, because remember, we want to wait for the peak to form, right? So for us to be sure, we have to take out that low, then come back into the range and sell. So our sell is going to be here after we have seen the peak formation form. That's where we're going to sell from. But we have to wait for us to take out that low to confirm that, yep, because when the market is going up, the market has to print lows, right? You're concerned about lows when the market is going up, and you do not want to see any of them being taken out. The moment you see a low get taken out, then it means we are now in a downtrend. That's what it simply means. We are now in a downtrend. So you don't want to see lows getting taken out, but you want to see them being respected. That's what it means. Hence, price came to this high. This is not a coincidence, like I always say, guys. It's not a coincidence. Hence, price came into this high. Look at this high. This high was responsible for breaking structure here, right? And this high was responsible for breaking structure here, right? Etc., etc., etc. Now, by breaking this high, it means we are confirming we are now in a buy trend. But by respecting this high, it means there's going to be a pullback that will happen, and then we can buy later, right? Now, if the market, okay, since the market has broken that high, it simply means this low is confirmed. So now we are looking for the setup to break the low and then show us a sell. All right, let me.
Hey, Coach.
Yes, how are
Um,
you?
how you doing? It's I wanted to ask you because you talking about exactly what I see on one of the charts,
Mm-hmm.
and I want to see should I am I looking at it properly, or did I break it
Mm-hmm.
down properly,
Yes.
or if I should be waiting because it may go past what I'm looking at.
Mm-hmm.
Could I go over one chart with you? It's on the same
Yes.
what
Yeah.
you're talking about. It's on the same
Yep.
thing. So
Yeah. Which one is
okay,
it?
go to ECHI. Euro CHF.
Euro. Oh, Euro C. Aha. Okay. I was looking at that one yesterday. Nice. Okay,
I
Euro
see.
C.
Okay, now I'll break it down quickly and get to the question on the 1 hour. Right. So, okay. So, all right.
Mm-hmm.
So we're coming back to the 1 hour, the peak right there, or what I believe is the peak. But go
Mm-hmm.
to the weekly for me. Go to the W1.
W1.
Okay, so on the W1, it shows we have our peak coming here, and it's confirmed. I saw it confirmed by the TDI. So I
Mm-hmm.
can't find. Oh, there you go. Okay, move it. So we have a peak here, right? And then we have the level one for the daily right here. Pull back and it's going to go up, right?
Mm-hmm.
Now, I'm looking for a buy position. Go to your D1 for me, please. All right, so the D1 is showing it's already. This is how I broke down the D1. So we
Mm-hmm.
have a big W. We have a big W from the D1. We have the peak we have a big W for the week one. We have a peak, the second leg for the D1, and then we have the first level. It came and provided with a reset, and then went up one level. Go to your um, go to the 1 hour for me, and then we'll get to where it was. So on the pullback, right? The pullback gave us um, it gave us a peak. It gave us a oh,
Oh, sorry. Yep.
it's okay. So it gave us the peak up here, right? This is the peak, but it's actually just a pullback. So we have a peak here. It dropped down. It gave us two levels on the 4 hour. Drop down, drop down. Now this is supposed to be the peak, but this leg has not broken this first leg. Is that
Mm-hmm.
confirmed, or should I not? Could it come back and keep going down?
Right. That's a very good question. Now, this is how you find out this has been confirmed or not, based on the H1, right? So your market was printing lower highs and lower lows, right? While
Mhm.
it was going down. Up until it came to this point where it did not take out that low. So this is where we are now. All right. So if you look at it, that's how it looks like this. So that is what the market has been doing. So what does this mean? This means the last low to be taken out when we were going down is this one and being taken out by this guy. So for us to confirm that now we are on a buy, and this is H1, imagine. So that means H1 we have to confirm sooner than W1 or D1, right? We have to confirm sooner. So for us to confirm on H1 that, yep, we are now on a buy, we have to take out that high and we have to close above it. Now, let's have a look and see if that's exactly what happens. So there, our low has been taken out by this guy while moving down. All right. So our low taken out right here and the high right there. So if you look closely, you'll find the high hasn't been taken out. Now, someone might say, yeah, but it does look like it's been taken out. Remember what I have said. We want to see candles close above that high. This is not a coincidence, guys. The market is very tricky and clever, right? The market is very clever. You can tell they formed this high and they literally made sure every body candle will close below it. That's how cunning they are, and that's how they take your money. They're very clever. They made sure that body candles, they need to close below. And that candle on its own simply shows you that they attempted to break it and they were pushed down. So at this point, we do not have a break, right? We do not have a break. So even H1 hasn't confirmed a sell. So what it means is do not be surprised when you see the market do that first. before it buys. Do not be surprised. Now, I was entertained by your W1, and I was kind of like saying, yep, that looks like a very good setup. So if you look at your W1, your big W, I was actually looking at it and I'm like, this might be a good sell for the week before we take that buy that you're waiting for. Why am I saying that? It's because if you look at it, you'll find the market, of course, hasn't taken out that low. Let me use a line. Hasn't taken out that low, right? So it looks like it has matched the low. So the only low that you know that was taken out in this case is the high, sorry, is actually that one right there, which is very far, right? So there's a possibility that before the market were to turn, the market will come down back here before it can go up. There is a possibility. Like, I'm not saying that's what will happen next week, but there is a high chance this is what's going to happen. And this to me is already being shown by what they did on H1 there, which I suspect, in as much as I would love to have this as a buy, I suspect they might do something like this and then sweep the high and then do that. I suspect, right? But if on Monday, all of a sudden we open the market and we start buying, okay? Or maybe buy up until maybe that high, or show candles closing above that high, then I can say, yep, start looking for buy setups. Start looking for what? For buy setups, if that happens. But for now, we are not buying. We are selling, unfortunately. Though this might look like a peak formation, I'm telling you, there is a high chance you might also see a reset next week. Or there's a high chance they might spend the entire week doing that. And then you'll be like, maybe they are forming higher time frame peak, and then you see gone. They've gone down. So for now, we do not have a confirmation. Same thing is there also on Euro USD. I was looking at it yesterday when I was studying, and I said the last low to be taken out is this one. So being taken out by this high. So what it means is for us to confirm our buy, we need to have candles closing above here. Now, if you zoom, you will find that this candle closed outside slightly, like almost slightly outside. There is a reason why the dealer did not close the entire week above there. They are very clever, and they make sure that they close in the right places at the right time for you to get even more confused. So when I saw this, I was like, nah, I'm not buying this. Sorry, when I'm saying I'm not buying, I'm not saying like taking a buy. All right, I'm not buying their story, okay? So I was like, nah, I'm not buying their story. This for me is not a break outside. I will wait and see what Monday will do. If Monday is gonna give me more candles here, I'll be glad to then confirm that is a buy. And here we are on H1. Remember, we're on H1. So if we are on H1 and this is what I see, just imagine what happens when you are on higher time frames. Now, just a quick one. This is going to be a quick one, all right? Let me do this for you. Just a quick one. All right? Let's say you want to buy the market from here. You saw that buy there, right? So let's say you want to buy the market from here. Why? Number one, you are finding an area there where price reacted to recently. Some people call this demands and supply. It's entirely up to you what you want to call it, right? But for me, everywhere where price reacted, especially on higher time frames, where price reacted before, I take those with great importance because I know when price comes there again, it will definitely react, especially higher time frames. So I don't take those areas lightly. That's why I said you can call them supply and demand. It still doesn't matter. These are supply and demand are the basics of trading. Everybody knows that, right? So this is where I'm expecting um my buy. Okay. So if I drop down to the 1 hour time frame, how am I gonna find that buy? All right, let's check. So this is what you have right here. And if I play this, all right, so it means this is your confirmed high because it broke that low. So what you want is price to close above for you to say, yes, this is a buy. You see that? Price hasn't closed above. Now price has closed above. You can see what's going on there. Price is closed above. Okay. So since price is closed above, what do you want to see? Probably you can look for an IT50 or a pull to the 50 since you already have a 1350 crossover. So you want to see your setup somewhere right there, right? Now let's see what happens. You want to buy. Okay. Don't worry that it went up and all that. You still want to buy. And don't worry that it hasn't come to your entry, right? Did you see what happened there? Did you see what happened there? Because that high was taken out, this high was taken out here. All you had to do was wait for a buy here. And what happened? Price eventually came back for you, took you in, and you're in profit. That's exactly what I'm talking about. Now, the trend has changed, right? On the 1 hour, the trend has changed. We've confirmed that. If we switch to the 4 hour, the last high on the 4 hour is this one. The last confirmed high because it broke that low. All right. So that means now we have confirmed we need to buy. So what do we want the pair to do? We want the pair to pull back, right? Remember, on H1, you're already on an uptrend, but H4 is actually telling you, I need to pull back before I go up. So let's see what happens.
Wait, Coach. I have a question.
Mm-hmm.
Because I'm looking at how you're confirming or doing your higher highs. If you go back to the 1 hour for me, and
Okay.
so I can try to understand why. So, but when you were talking about the move here before that happened, we had
Mm-hmm.
the buy there. The
Mm-hmm.
reason because I was okay when it went up and then it came down and then it started to go up. Why was this not a low? That wasn't a low because this wasn't confirmed high.
Yes. So,
Okay, okay,
so,
okay,
so,
okay.
so, so, very good question. The reason why this guy is not a low, he did nothing. If you look, he never broke any high. But the guy who broke the high is this low. This low is the one that broke that high, not this low. This
Okay, I
guy is
think
not a low because he didn't do anything. It's just the
that's
market.
my
Yeah, it's just the market ranging between that low and that high. That's all it's doing. It's just moving within there. But this low is the one that took out that high. So it means this low is confirmed. And that is the only low. Okay, of course, adding with this one. This is the first low. This is the second low. These are the only two lows that you have at the moment. You do not have any other low. This is not a low because it hasn't taken out
that's not
the high. There is no
okay.
low here, hasn't taken out the high, or sorry, this high. All right. That's what it means.
That
Right.
means that I don't know how to count my highs and lows properly.
It's all
Okay,
right. It's all right. It's all right.
got it, got it,
It's all
Coach.
good. If you want us to talk about this 1,000 times, we'll talk about it every single lesson until you get it, right? Because it will help you also not to take any trade. This is why you find when I trade, I only have like 2-3 setups per week, and then I just focus on that, and that's it. And I don't look at any other. Like, I know someone would expect me to trade every single day. I don't do that anymore. Those times were passed by a long time ago. I only trade when it's necessary, and I can stay for the entire week without a setup, and that's fine with me. Just marking charts and seeing where the price will go. All right. Now, because on the 4 hour we've had um on the 4 hour we've had this taken out, so it means now we want to see the market show us um a low. All right, so what it means is, let's check out. So look at that. Still, that high hasn't been taken out by H4, but at least we have pulled backwards inner to confirm that this might be a low. It's not confirmed, but it might be a low. All right. I don't know what's going on with my mouse. I think my son did something to my mouse because it's acting up. All right. Yeah, it is acting up. Anyways, let me use my keypad. All right. So this hasn't been confirmed, so I'm gonna be a little bit slow because I don't have a mouse now. The low hasn't been confirmed. This low hasn't been confirmed because it hasn't broken any high. But on H1, it has been confirmed because it has what? Broken this high. All right. Oh, it's gonna be a long day. Okay. Now keep on moving. This is what you have, right? So that means this guy is now a confirmed low because it has taken out those highs. All right? It has taken out those highs. Going to the H1, same thing again. On the H1 anyways, we're still in the same low. So we still haven't changed anything really on H1. We're still in the same low. But that is what you guys will be looking at. If you go to D1, it's a totally different story on D1 because what it means is for us to be sure that on D1, yes, this is a buy, we have to take out that guy on D1 instead. If I were to accelerate this, right? You see, your D1 has been taken out at some point, but before taking out D1, they had to pull back. That's probably maybe H4, I think. That was pulling back, and then they had to pull forward. They took that out. So now it means we're looking for a pull inner before we can take the buy. All right. And that pull inner never happened. That's what happens in the market. It will not always happen all the time. Never happened. And it basically left and then came back a while later.
All right, Coach. I have another question.
Mm-hmm.
Okay, so if we have to wait for highs to be broken to confirm a low,
Mm-hmm.
then how do we know where to take our trade or the best possibility to take our trade? Because we don't know if it's going to continue to go down or not because the high hasn't
Right.
been broken.
Right.
So
That's a very good question. So personally, I trade from the 4 hour, right? So personally, I trade from the 4 hour. So if I have something like this from the 4 hour, and then I see a peak formation on the 1 hour, right? I see a peak on the 1 hour, and then I take the trade on the 1 hour. I will gladly watch the 4 hour and see if it takes out that high. And then if maybe it has gone 3 levels up, I can book profits and wait for them to come back here. Or I will wait for the 4 hour to make this entire setup so I can then look for a buy. But like I always say, your targets are highs. Your targets are highs. Unless if you want to swing trade, then you can stay in the market for as long as you want. But if you are not comfortable with swing trading, your targets are previous highs. That's what you're looking at. All right. So it's not that hard for you to know, okay, how am I going to take the trade? If you want to take the trade from the 1 hour, most probably you'll find your target will be this for now, for 1 hour. Your first target will be that guy there because you would have seen this entire thing form here, right? Before it comes maybe for that. So you would have seen that confirmation earlier and then taken your H1 and your target is that high right there. Last week I was supposed to send a buy, but I don't know how I forgot to send this buy. I actually realized it after marking the chart that, oh, I didn't send this one. I was supposed to send this buy last week. This entire buy. Right. From here. Oh. From here all the way up to there. Target being the high. All right. So, all right, let me use replay so we can remove the entire thing. So I was looking at the market and this is what I could see last week. So I said the market is forming, market has already started moving upwards, right? So what I'm looking towards is us coming inner because we've broken the high there. I'm expecting the market to come on the inner part, right? And obviously, the most area where the market might turn around on is where it reacted, right? So I'm expecting to see my market do something around there. And looking at it from the 1 hour time frame, that is where I wanted to see it. That's not a low for last week, but that was generally concerning to me. You can tell what the market did over there. Again, I always confuse demand and supply all the time. So I always make sure that I'm sure what I'm talking about before I say it. All right. So that is where I expected my price to come from in the buy, right? And we came down there. Now, I want to show you something. Let's see if that thing came up. All right. Let's say, some people love to trade on these lower time frames. I'm not a fan of that. But let's just say you want to trade this entire thing. This is a 5-minute setup. So you want to find it from the 5 minutes, right? That's what I was flexing with. So that was the last low taken out. So what it means is if price is because it is in this area, which is a key area for me to be sure that this is a buy, I need to take out this high, right? That's what I was looking at. So go up and then I realize this is what we did. Move up. And we've got a few candles closing above there. All right. So that means I'm now looking for a setup on the inner part, anywhere where I can buy, but usually on the IT50, that's where I love to buy. All right. It doesn't want to come to my 50. But you can see how the 50 is actually coming to where the price is, right? Probably by then you'd have taken the trade if you want. Okay? Right there. Right there. That's where I was like, okay, that could be a good one. All right. Unfortunately, I didn't take it. I'm just saying I wanted to send it, but I didn't take it. Right. And my target was that we need to get to the previous high. That's all. So that's a very good target because that's what you want to see, right? Get to the previous high. That's what you want to see. Getting to the previous high. And yes, you will have these things, pullbacks and all that. Now, while the trade is moving, you keep on changing time frames because there's no point to still remain on the 15 minutes time frame when you know that the market is moving. You can see the pullbacks, right? And I know those pullbacks, they scare. Like, what is the market doing? But eventually, the market gets where you would have loved it to get to and taken out your TP. But where it came from, it's coming from the fact that we have taken out the high, we are coming back into the range. And by coming back into that range, I'm expecting the market to go one last push. So this is more like going towards the second leg, all right? Because we've already formed the first leg. Oh, we've already formed the first leg, and I'm anticipating that we form the second leg, all right? So that's the entire reason why I expected this to do whatever it did. Okay. And now that you're out, I don't know if the sell did show any setup whatsoever. Mm. Right. So if you look at this, the lowest low to be taken out is this guy. And no, it's not that guy, but it's that guy. That's the lowest part to take out that high. This is on 15 minutes time frame, right? Right there. So ideally, if we were to come back up here, that'll be good before we go down. But if we don't, it's still fine. There we go. There we go. See that? So that's all that you're doing, guys. Because you have taken out that low, you're now thinking, yep, now it is a downtrend. So you start looking for those areas where you've got consolidations, and that's where you are looking for setups. That's the question that someone was asking, like, how did you know that price was gonna turn around from there? That's all that I'm looking for. Those areas where we've got those consolidations, you can call them support and so forth, right? But that's where I'm expecting my setup to come from. And I take the setup. And where is the target? Very good question. I go to my 1 hour. Oh, forget this. I go to my 1 hour and say, I would love to have my target. All right, let me use that guy. I would love to have my target right here, right? Yeah, anyway, right there. And then now I'm sitting on the 1 hour. and this is where price closed. So that means it's close to the target, something like that, right? But I saw the buy. I didn't actually see the sell, but I did see the buy, and I said this buy was moving towards what I would call the second leg for the entire M. All right. So that's what I saw. And I said, we can't live here with one leg. I would love to see us go back up. Risky trade, but worth it. All right. So it's risky because what if they don't give you the second leg? But again, what if they do? You do not know, you don't live in the future, so you might as well attempt it and see what happens. So that was a very good trade, and I regret not taking it. And well, I would have seen this one as well if I had taken that one. It was going to be easy to then trade the sell. UJ is my best um, pair. I really love it, and it always gives me good setups all the time. Anyways, now let's go to the next question. What's the next question? I don't want to stay too much on same thing. Today we are talking general stuff, guys. General stuff. So ask questions and we move. That's all we are doing. We are not analyzing for the new week or whatsoever. Today we're just asking questions, dealing with questions, and we said we'll stop at 8:30. So now we're left with 45 minutes. So I need questions, guys. I need questions.
Okay, I have so you stated that you so your big picture or you watch for is your 4 hour, right?
Yes.
Now you watch for your 4 hour. Um could you okay, so for you to be interested in the chart on a 4 hour, what do you look for? And then how would you drill down from there to the 1 hour? Kind of like what you just showed us, but like
Okay.
put it in order, like give us an order of it. Is there an order?
Right. There is an order. Okay. I was hoping someone was gonna ask that question. There is an order. All right. So last time I predicted this buy move. It's bad because I have to use UJ. And because UJ is my favorite pair, it would be as if I'm just copying and pasting stuff. But I would love to use other pairs as well as examples. But I did find this buy move and I did give you guys a buy from right there. And how I found it was pretty easy for me. And I will cut it from there. Right. So I get into the market and I do have my procedure of things that I follow, right? And first things first, to understand the market structure, right? That's the first thing that I do from higher time frames. I want to understand the market structure. Where are we going? And looking at this, we're in a buy trend, right? Just from the higher time frames, just looking at it, we're in a buy trend. So what it means is if I were to take a trade like right now at gunpoint, I was going to take a buy, okay? Because we're in a what? In a buy trend. But that doesn't mean lower time frames will do the exact same thing, right? Um, and I was going to show you guys this. So I have this thing. I've had it for a long time. And this is, can you see my screen?
Yes, I can.
Right. If you can see my screen, this is what I look at before I take a trade. So below that, then I put my trades and say, yep, this is it. This is where I will go. But what I want to focus on is, first of all, I establish market trend or bias using market structure just to find out where we are going. And then from there, I mark out the key areas that price is potentially attracted to. What it simply means is where in this area can price go to next? And where is it coming from? All right. So I need to find why price all of a sudden turned there. I'm not going to find those reasons all the time, but I need to find why price turned from there, why price reacted from here, and why price changed direction from there. Now, if you look at this one, you can clearly tell price was reacting to the same resistance area right there. So at least I know why price turned around there. And I can tell that currently we are somehow reacting to what do you call this? The neckline of a W, because I can see a W there on lower time frames, and that's where we are reacting to. All right. And then now these are key areas, and I'm saying, okay, if price were to react into that area and show me a substantial confirmation that yes, we are now going to move for a buy, where will price go next? Right? Where will price go next? That's my question. I'm looking for key areas, and I'm thinking to myself, we've got an area where we reacted to here again, which is a bit concerning. So we'll have to find out why. And obviously, the top area right there, we might also react again right there, right? But this is weekly time frame, and it's far. So I'm just looking at those areas, and I'm like, okay, so this is where we are. If we do react here and show a buy, where would we go next? I'm thinking we might go to where I've marked my first box right there. Now, that's all that I have at the moment. So next thing, obviously the D1, I'll look at it as well. And then after that, I can confirm if the 4-hour or the 1 hour has changed direction bias to align with the higher time frames, right? So if I look at the D1, this is what I have. On D1, you can then probably start marking extra areas if there is need to. But if there is no need, then don't worry about it, right? You don't want to have too many lines and all that. All you want is just the general direction, okay? So that's D1 from me. So usually I say W1 and then I skip and go to the 4-hour. Now here I am on the 4-hour. Has the 4-hour changed direction? You can answer on the charts page. Has the 4-hour changed direction?
Yes, sir.
Is it? So 4-hour hasn't changed direction. You know why? Because we haven't taken out any high. Any previous high hasn't been taken out. The 4-hour is still a sell. All right. If you look closely here, there appears something like another break of the low, right? Which might also mean that this might be the latest highest point for us on the 4-hour, right? This might mean this might be the highest point for us on the 4-hour, because you can tell how the market formed a low after breaking that low, and then how they had to go up and then come back down and break that low there. That's what we're looking at, right? But this will be visible more on the 1-hour as well. But I will take this for the 4-hour. I will definitely use this as my area. So let me remove the rest of the lines because it might end up confusing. So that is where I am. And the market hasn't changed direction. It can only change direction if it takes out that high. On the 1-hour, same thing, right? On the 1-hour, same thing. That area that I marked there is important. But then on the 1-hour, I realize that, hold on, so that's our low, okay? So that means what broke this low is that high. Not this high, not this high, but that high. That is the move that started, where the move started is what resulted in us breaking that low. If we say this high, we'll be wrong. If we say this high, we'll be wrong because the move started from there, right? That's what you need to pay attention from. So ideally from the H1, I would love to see us go up. And then I would love to see us come back within range. Then we can buy. This is me analyzing, all right? I remember I sent the setup anyway. This is me analyzing and saying, yep, that's what I want to see. But because that hasn't happened, what do? It means at the moment, it's a sell. But I'm waiting for a buy. So I'm not going to take the sell. I'll wait for a buy. Why am I not taking the sell? Because why is the point of taking a sell when you know that you're waiting for a long-term buy? Why would you want to counter trade? But I can tell you now, some people, they would go for the sell. And if you want to go for the sell, I can guarantee you if you go to the lower time frames, maybe 5 or 15 minutes, you will find the sell will appear here. It will definitely appear if you want to trade it, because it just has to break that low for you to say, yeah, that's where the sell is coming from. You know? So if you really want to trade the sell, you can still trade it. Now, this is a new week, so you can tell your sell right there. All right? Your sell right there. Now, I'm going back to the H1 because that's not important to me. And now, because we haven't taken out the high, what does it mean? It means my low is in trouble. This one. It means my low is in trouble. It's either that low is going to be taken out or we might sweep some stops underneath it. So let's see what happens. We pull back as we should. Remember, because from the 5 and 15 minutes, the sell set up. Oh, so that's why we're pulling back, but that doesn't change the fact that it is still a sell. There you go. There you go. All right. So from the H1, you can tell that I have a new guy in the town. So this is now my new high because I've taken out the low and I've seen candles close below it, right? You can tell so many candles have closed below it. So that confirms this is my low. This is me, right? Now, while I'm doing this, what is my next step? So because I'm confirming the direction bias, now I have to mark my levels on H1 or H4. So now marking my levels, because I had already marked my levels, but I was going to mark my levels starting from there. Because your levels are very important. That's what will tell you whether a cycle is complete or not. So if I look at it, this being my level 1, right? Someone might say, why are you marking there? Why are you not marking up to there? It's the same thing. Why am I saying that? Because marking up to there, the next day, price came down and price went back up. So it means price never moved. So I do not mind bungling the entire thing because price didn't move. All right? Or if you want, you can leave it here. It's entirely up to you. But price didn't move on that particular day. Now, then price moved down on this day. So that means if you want, you can then include this under your level 2 and say the entire thing is level 2. So what are you waiting for? You're waiting for the market to show you level 3. Now, do you realize that even, okay, that low, which was broken out, this one right here, is actually a level 2 low. That shows you that everything is aligning well, all right? It's actually a level 2 low. You can actually tell by looking at it, which then means technically this becomes your level 1 low. Until your low gets broken, then blah, 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 blah. That becomes your level 1 low. All right? Which is why I was saying I am better off including it where? On my level 1. All right? That's what I will do myself. Now, I'm waiting for the last push, which I've already seen here. And all I'm looking forward to is to see how we're going to form the peak formation. All right? So what is the next step? Obviously, my next step is I need to evaluate what could go wrong. All right? So in this case, I look at what could go different here? What if the market continues to sell? Is there anything that I can see here that can make the market to sell? Obviously, I'm in my second level and I'm expecting the third level. Why would they sell? Those are the kind of questions that I'm asking myself now. And then I can move to the 4-hour time frame. Look at the left-hand side. Have we reacted in this area before? Where would price be attracted to? Looks like, yes, we have reacted in this area before. And if price were to go down, this is how far I would expect it to go. I start marking that level as well. I would expect price to go as all the way to that low, or at least rather to that candle. That's where I would want to see price go to if this goes wrong. All right. But at the moment, I do not have a buy setup. Right? There's no buy setup at the moment. But that's what I would expect. So everything is all set. Now I know what could go wrong. And it's not like you won't make mistakes. You will make mistakes. All right. And you will not win all the trades. Now, remember what I always teach you. Here, what I'm doing is using price action to determine everything is in place. I haven't used any indicator whatsoever. Now that I'm sure nothing will go wrong, then that's when I introduce my indicators. Because indicators, they follow after the trend, right? So I get to my indicator, it's already showing me bulls to show me that, yep, we might be in the course for a buy. And right here again, it's showing me bulls. So that means I'm pretty sure we're now ready for a buy, even though the MPO is still facing downwards on the H4, but on the H1, I can tell my MPL is now facing upward. So where do I want to see my setup? Around the 50M there. That's where I want to see my setup, right there, around the 50M. So let's see if that's going to happen. But ideally, sorry, not 50M, but 50 level, around the 50 level. This is 0, this is 50, and this is 100. Did I even say that right? Because this is 80 something, still the same thing, 80 something, and then 0, 32, blah, blah, blah. All right. But still the same thing. My mid level, which is the 50 level, right? That's why I'm expecting to see my second leg on H1. All right. What do I mean? I mean, this is what the market does, right? When the market forms a first leg, you will see it maybe on the boundary or a shark fin, right? And you see that your second leg or where you will take your trade is usually around the 50 level right there. Now, do we have an example for that? Let's find out. If we do have an example for that, where have we turned the market around at some point? This right here doesn't really show it. Yeah, maybe this is close. Yeah, maybe this is close. So what I'm saying is what I'm looking for is that's my first leg and my second leg is closer to the mid 50 there. So that's where I'm expecting price to turn around from. But this usually happens on areas where the market is turning around. What have I done here? This usually happens on areas where the market is turning around, right? So the market is changing direction. That's where you oftenly see how you enter on the 50. I'll talk about this on another day, but that's what I'm expecting, right? I don't want to deviate from this. So now this is all set. If I come to my MT4, all right. These days I love using TradingView because of the ease of marking and all that. But I'm not saying don't use your MT4. It's good to use your MT4. Then what I do next is look for my tool, ADR2. My ADR tool says 369, but I know that wasn't 369 by then. All right. But we can still use that figure, 369. Let's see what happens. So 369 is somewhere around there. During that time, I knew that it wanted the 380 to be around there, which is where the market currently is right now. So that's where my ADR was. So the 380. So meaning if I take this buy, this is how far I would want the buy to go. But my exit was somewhere there on that high. That's where I took my exit from. And then we had this entire drop, which I remember talking about and saying I still expect JPY pairs to go up. And then I came back and said, I think I was wrong. Now they've sold, but good thing is, turns out I was right when I was now looking at the other pairs. I was like, yeah, they did actually go up all the way up to the 380 that I said they will go. This was just a
Okay.
pullback, so we can have a higher low on the 4-hour time frame. So I looked
Got
at that and I was like, yep, that happened. You're saying, Ricky?
Okay, so you like just what you were saying that you had you may have thought that the market was going back down right there.
Yeah.
And the reason I gave you that impression is because it closed and then went down. It actually closed, which means that the low would have been this low right here. Why? Okay, I'm just following you, making sure I'm following you. That's fine.
Yeah. Because I remember we were talking about this and we said, yeah, the market is now going down, but I was still advocating for the market to go further up. I remember saying the market still needs to go further up. And even when this sell came in, I was also confused as well. Like I was like, what is happening here? Why are we having a sell? That's why I said to you guys, oh, maybe I'm the one who was wrong. And then later I see the buy come back up and I'm like, oh, so I was actually right. The reason was because this lower, this higher low is for the 4-hour. So it means the market had moved its 1-hour highs, and then it broke that one, came back, formed the low, and then went back up.
To
And
reset.
sorry?
To reset.
Yeah, to reset, yes. But good thing is, which is what I love. So it will always come to the second low. So if it breaks the first low, it will come and turn around on the second low. And that's usually where your resets will be located. So always watch out for that. It happens pretty much 80% of the time. I've seen it happen. When we take out the high and we are going for higher time frames, higher low, because this is an uptrend, all right, you'll find that they will not break the second low. They will actually match it and then go up. But if you see them taking two lows going down, then something is wrong. It means the market direction has definitely changed. All right, so that's another added confirmation as well. But that's what I was looking at. So putting my 380 error there, I expected the market will go down to there. All right. You can also use your moving averages as well, 1350 crossover, 5200 and all that as you go. But because we are still down there, I haven't seen the moving averages. So I can't say, yep, now we can then look at moving averages because we haven't seen them. All right. So now after that being said, calculate your risk. Obviously, that's a personal thing that you do. Calculate your risk, see how much you're going to risk on this trade. And then the next thing, look into your news calendar. What do you have in terms of your news? For JPY, for me, news will come in the Asian session. For USD, news will come a little bit later in the New York session. So I think I was good on that day. And then double check correlating pairs. What this means is look at the other JPY pairs. Where are they going? Unfortunately, we won't do that because we'll spend a lot of time looking at the same pair. And then from there, wait for a confirmation and execute. That's the most important thing now, waiting for a confirmation and executing. All right. So how then do we execute that pair, which is the most important thing? So I've followed all that and I've looked at all that. These are the things that I check myself. All right. That's my trading journal. That's what I check when I want to know, okay, what am I going to do? All right. So I'm still on 1 hour. Now, remember, you can go to the 15 minutes time frame and look for the setup from there. Okay. You can do that and look for the setup from there. If you check on the 15 minutes time frame, you'll find that you probably have already broken the high, which is this one right here. You've already broken the high right there because that high is the one that was responsible for a break of structure right there. So that means if you were to take the buy now, you are still okay to take the buy now as is, right? You're still okay to take the buy now as is. But because I'm looking at this from the 1 hour time frame, I don't want to be lowered into stuff and then I lose. So I'm looking at the 1 hour time frame. So I'll wait for the 1 hour time frame to kind of confirm, right? But 15 minutes, you can still do the same thing. You see why I didn't want to trust the 15 minutes? Because in as much as they didn't close below the low, but they did come hunting, all right? And then you obviously have this and your price starts going up. And this doesn't mean you are not allowed to trade, guys. You are allowed to take a trade as it is right now. You are allowed to take a trade on your on your 1 hour because you've seen the W, you've seen the level 3. Yes, you can take the trade. What you will simply do is when you take the trade is then watch out for confirmations to see whether the confirmations are going to come as you anticipate whilst you're already on the trade. There's nothing wrong with that. All right. There's nothing wrong with that. So you can see how we have taken highs on our way up, and you can see how we have also taken this high too on our way up, right? So it will be good to have the market come back down so we can take a buy. It will always come back down. All right. So my area of buying is somewhere right here. Yeah. Somewhere right there. All right. Somewhere right there. But I remember you would have still taken the trade from there. You would have still taken the trade from there. But I'm just saying, if you wanted it to take out highs before you take the trade, then you can wait for it to come back down there. And like I said, the areas where you are focusing on can be the ID50, the neckline. In this case, you've got the neckline right there. All right. Neckline, ID50, these are the areas where you would want to see the market give you a setup. And then what happens after that? All you have is a buying market. So let's just say you entered at the start of the neckline there with your stop loss away, and your target being firstly this guy, that high. All right, let me zoom out so you guys can see where this is coming from. So you can see how the market has already moved. So you could have taken this from the 15 minutes time frame, profited from it, or if you have missed it, you could have then taken this instead, right? So we are hoping our TP gets hit. There, bang, TP is hit. All right. So can I take a, what do you call this? Can I take a sell on this pair? Of course not. You can't take a sell. The only thing you can take is buys. Now you have another buy here on this day. This one is more like, I don't know whether you can call it a safety trade or what, but this is a very nice buy on the W on a 15 minute 50 M, all right? A very nice W on 15 minutes, that one. It's even visible on H1. So what would be your target be?
My push. Now only money now you go understand my push.
Yes. So that is where your target is, all right? Okay. Now that is where the sell came from, right? That is where the sell came from that particular day. But this is where you would have been targeting your high right there. So it means, oh, what's going on? So it means you should be fine on this side right here, though it probably missed your TP by a few pips. But that's where the sell came from. Now, so now I know this is a buy because we're moving as a buy. So imagine where I had to take this from. If I move to the 4 hour, this is where I am on the 4 hour, right? Because on the 4 hour, I've had a low, a high, a low, a high. So this low has been confirmed. Now let me wrap everything so you can see. This low has been confirmed. All right. So either I find a setup there or anywhere else where I can find a setup. Probably difficult to gauge now, but let's see what happens. So I get something like that. If I move to the 1 hour time frame, I should see something exciting. Of course, nothing here. 15 minutes. 15 minutes. There's no break of structure there. Now, like I said, it doesn't mean that when there is no break of structure on 15 minutes like this, you can't take the trade. Yes, you can take the trade. But if you want a proper confirmation, you can wait for them to take out that. All right. You can wait for them to take out that. Now, if you look carefully, because the lower time frames are a bit tricky, even that is a break of structure too. What do I mean? Here is your low. Uh-oh. Here is your low. And after the low, the market pushed up and then the market pushed back down, taking that low away. So you need to, especially on smaller time frames, you need to open your eyes to see these things. And we have a break. And after the break, then you take your buy. All right. After the break and pull down, then you can take your buy. After a few moves, I turn to the 1 hour time frame. Where is my target? I'm thinking, all right, I'm going to be ambitious and target that way. Let's see what happens. You can see what the market does. Market will never move in a straight line. There you go. Shoot. It has taken my target right there. All right. So that's how you would have traded this entire buy, or rather holding until the entire thing gets exhausted. But it's hard again because you've got emotions involved and you'll be asking yourself so many questions along the way and wondering what's going to happen. All right. Like I said, now we're already left with 10 minutes and I've stay too long on this question. All right, last question. What's the last question? Before I go and have some tea.
Good evening, Coach.
Yes.
Aha. Thank you so much for all your efforts to build us to be at your pace and to see market the way you are seeing it. And we never take it for granted. For this, I give you this clap and I celebrate you so much. Please, with all due respect, yeah, I know that it doesn't concern you, but at least as a coach, I would like you to advise many of us on when you plot an analysis, you counted level at the end of the day, you expect a buy, and there was a very deep power retracement. Now, how do you help people not to be discouraged and still mark again until they now get to that level? Because, like me now, I have some students that when I train them, I will need to work more on their psychology because we have different level of agility to withstand pressure. So how do you help when it comes to BTMM, you counted levels? Oh, you are the one that didn't do this very well, or what are the things that you use to bring your spirit back when such thing happen?
Uh it's a really tough question. And the reason why it's tough, it's because make sure those steps of taking a trade on the group. Oh, all right, no worries. I will share those for you. Those are personally for me, but I can share them with you if you wanna use them that way, or you wanna um uh make yours or edit or whatever. I will share with you. And I use Notion. It's a free app. Notion is a free app. You can actually open an account there and then create your own journal. You can also click on search and find other people's journals and use them as templates and so forth. But you need to be consistent with this because you have to put in also your trades that you take and say, I took this, but obviously you won't put, say, I made so much or whatever. You just put that I took this trade at this price, so. And probably if you want a reason for it, for why you took the trade and reason why it became a loss and all those things. All right. Now to answer your question. So that's really difficult, I would say, because there is so much you can do, and most of it lies with the person himself, right? I can come here and tell you all that, all right, you know what, next week, well, I used to do that long back, but I realized it was not the right way to do. So we used to give out long back signals, not signals to say, but like I used to share and say, oh, yep, now let's buy here, let's sell there, blah, blah, and all that. And things used to be fine, enjoying the market, you're still new in it and all that. But I've realized that the person himself, whoever it is, they need to have interest. And I'm going to be honest with you guys. I take time on the charts. I research, I go to YouTube, I watch how other people explain. And I can tell that whatever someone is explaining there, that is rubbish. And I change the video, or I can tell that whatever this person is teaching here is valuable information. If you want, I can show you even on my YouTube. This was the video that I was watching last night, right? Liquidity plus structure equals to profit. This was the video I was watching last night, right? And if you want to see it, you can see that all my subscriptions, I do have people who trade, right? I do have all these people who are traders, right? Of course, these are the two because they are friends. So I'm just watching their videos every time they post. and they trade BTMM as well. So I just watched their videos. This guy trades ICT, and he's actually from Nigeria. And I do watch his videos. Some of them make sense. Some of them I'll be like, nah, that's not the right way I'll do it, but I do watch it. This guy is very good when it comes to market structure stuff and also his demand and supply. I don't know, do I have somebody else? I think that should be all. But yeah, I I do listen to people
Thank you,
learn.
coach. That I've seen myself. I've seen
Yeah,
myself,
yeah,
coach.
yeah,
Thank
yeah.
you.
Yeah, that's your channel as well. I also subscribe to your channel too. So I do watch it. If you send a video, I will watch it. All right. It's not that I can learn something new out of your video. You can say something that I can look at and I'll be like, yeah, that's actually really true. And to be honest, I back test. When someone opens a chart and say, oh yeah, this is my analysis and this is what we were doing on GBP USD, I will open the chart and look to see if the market did what you said it will do. If the market didn't do it, I don't continue a video. I move to the next one. All right. That's how I do. So I confirm. So interest is the first thing from a person. I've asked people to come to the meeting here and ask questions, right? But I can guarantee you only 2 or 3 people ask questions. You know why? Because some people would prefer to not speak, but have someone else speak on their behalf. Now, what happens is when they are by themselves now, they will then get stuck and they now need help. Then it becomes difficult to then help them outside the meeting when they had every chance to ask a question. So interest is the first thing. If you are always at the forefront, you will always learn a lot because you are availing yourself. You are asking questions and I'm giving you answers. It makes life so much easier for you. And I can tell you, very few people here are always talking. And I don't mind that because those are the people who have so much interest, right? So interest is number one. Number two, if someone marks and they lose a trade or they didn't lose it, but it didn't go their way, how they marked it, how I treat that, if it's me, right, and I trade USD JPY today and I make a loss, hit a stop loss or whatever, right? What I do is I go back to lessons. So I go back and start watching lessons again. If it means on that day I will watch 3 or 4 videos, that's it. Or if it means I go back to YouTube or whatsoever and search for videos on a certain subject that's similar to what I was trading, I do that, right? And stay away from the charts. And then I start back testing, and then I'm good. The following day when I come, I feel fresh. Every time when I study around Thursday, Friday, and Saturday, I feel so fresh for the week. Like, okay, we're gonna kill the market now because I saw that. I'm gonna blend it with this and this and this and this and this. You get the point? Because I can tell you all these strategies, ICT, BTMM, and so forth and all that, they have areas where they work on, they have areas where they don't. They will not always work all the time, number one. Number two, they are all the same. The principles for these strategies, they are so similar. If you put ICT here, BTMM here, there are things that are similar in them. It's just the terminology that is different, but they are all similar. You put price action here, talk about demand and supply. All those things, they are similar. Trend lines and so forth. All right. So the more you research and get info, the more you then say, okay, this is what I'll do. But the most important of them all, marking levels, right? And again, like I said, sometimes it becomes subjective when you're in higher time frames, right? So what do? You need to ask questions. That's why we have the Discord app. You need to ask questions. So if someone is feeling low because they lost a trade, they need to search for more information. That's what it simple means. And it starts by interest. All right. If you guys were staying with me here in the house and probably ask my missus how many times I'm always on the charts and just checking the charts back testing on TradingView. That's why I paid for TradingView, so I can back test. If you ask here how many hours I spend, you will be shocked, because sometimes even when they go to sleep, I will remain there back testing or watching a YouTube video, because I want to learn something every day. I need something new every day to say, oh yeah,
I'm
that's
not
so
shocked
cool.
at all because we
You
know
know,
ourselves.
so that's that's so important, guys. You need to put in the hours. I don't know how much I can explain this, but put in the hours. You can't just sit there, relax, and then wait and say, yeah, coach will call in EU buy. And then when I say EU buy, you take it, and then you say, ah, yeah, we'll meet in the next meeting on Saturday. You need to back test. You need to pull that chart. I told you and I said, not everyone can afford TradingView. That's very fine. But even if you can't afford TradingView, if you want to find out whether this market is going to buy and sell, pull the chart that way and then start to analyze this part. Start to count levels, do whatever you're doing. And then you start to pull the chart and say, okay, this is what happened. So what do I expect after that? All right, I expect level 1, I expect level 2, and so forth. You can do that. I used to do it that way. Back then I used to draw a structure and say, this is Wednesday, this is how the market will move Thursday, Friday. I would draw different diagrams and then put them on the table by the end of the week and say, which one did the market follow and why? You know, that's how I used to do it. So these concepts, guys, they work. You only need to put in the hours on the charts. All right. So interest is very important, guys. All right, guys, I think we have spoken a lot today. I'm just going to stop the recording.